Good evening and welcome to Capital Market. I'm Temple Ashaju. The Nigerian economy remains active in the feedback effects of the global headwinds, which ranges from volatile commodity prices and financial markets downturn, prompting capital flow reversals. The IMF's view on Nigeria did not come as a surprise, as it's projected already that the GDP may only improve by 0.4% in 2016 as against 2.8% in 2015. These are some of the projections that most analysts in the Nigerian financial market had come up with before the IMF released its report on the country. Meanwhile, the activity level of the equities market improved during the week as average volume and value traded rose 21.7% and 49.6%. While the bond market sustained last week's bearish trend, the average rates in the treasury bills markets trended higher than the previous levels. But on the show this evening, we'll be joined by a stock trader who will get us forward-looking into the industrial and conglomerate sectors of the exchange as investors await companies' earnings for the second quarter. In the meantime, here are some of the events that made our headline on capital markets during the week.
The African Development Bank and the African Securities Exchanges Association signed a 5-year memorandum of understanding to fund Africa's economic growth. The MOU is expected to provide a collaborative framework for harmonizing and coordinating the efforts of the AFDB and ASEA towards deepening and connecting African financial markets. The partnership will facilitate various projects of mutual interest to both organizations in the financial markets, infrastructure development, and improving markets liquidity, among other programs. The Nigerian Stock Exchange has released the second edition of its 2016 Sustainability Report, titled Ushering in a New Era of Sustainability in the Nigerian Marketplace. The document showcases the sustainability practices of the bourse. According to the document, the exchange achieved a 70% of lightning load reduction and 20% overall energy savings between July and December 2015. Meanwhile, the chief executive, Mr. Oscar Onyema, has described the report as an indication of NSE's advocacy efforts in supporting environmental, social and governance imperatives in the capital markets. The substantive president of the Chartered Institute of Stockbrokers, Mr. Oluseyi, plans to rebrand the stockbroking business through a partnership with other categories of operators in the market. Mr. Abe revealed his plans during an engagement with the broker-dealer community on the floor of the Nigerian Stock Exchange. In an interview with Channels Television, he explains the Institute's zero tolerance for infractions.
We are rebranding the whole thing about stockbroking profession. Okay, we're going to be involved in advocacy. Okay, we're going to be involved in education. I'm going to be involved in partnership with people. So if you look at that, rebranding, education, advocacy, and partnership, it captures what I see as the way to go for the stockbroking community. Rebranding, people have been looking at stockbrokers as a minute player in the whole economy. Okay, and our members, they have undergone rigorous training through the CIS to participate anywhere, and they rank pari passu with all the counterparts across Africa and the whole world. Okay, education, our market is evolving. And we're going to be having a lot of sophisticated products. Okay? If you look at it before, the stock exchange as a eminent platform in the past. Now we have about 3 other major platforms, okay, that operates in the capital market. We have the FMDQ, which is the platform for listed or fixed incomes. We have the NASD, which is the OTC market, okay, and of course we have the commodity markets. Education in the sense that our members should be able to operate in all these platforms seamlessly, okay. That will tackle the issue of income for them. So on our whole, it takes me back to education. We have a department in the institute that we call Continued Development, Continued Educational and Development Program. They have been reconfigured, okay, to look at all these initiatives across the market platforms and to train our members on an ongoing basis so that they can be relevant.
International rating agency Global Credit Ratings has affirmed Sterling Bank's national long-term and short-term ratings of BBB-NG and A3-NG respectively, with the outlook accorded as stable. Coming after Moody's Investors Service ratings of the bank at B2, JCR attributes its assessment to Sterling Bank's strong performance and resilience. According to JCR, the bank's total assets amounted to over 796 billion naira in 2015, while its capital base grew 12.2% during the calendar year through internal capital generation. The JCR rating is valid till July of 2017. But while the managing director of First Bank of Nigeria, Mr. Adesola Adedunto, says the lender's business activities are integrated with the Nigerian economy in a way that the bank's position could be impacted by Nigeria's overall performance and ratings. Mr. Adedunto was reacting to the latest Fitch ratings report that shaved First Bank's issuer default rating to B from B- plus, and FBN Holdings rating cut to BBB- plus from A. The new head of Nigeria's largest lender says First Bank is proud to be associated with the Nigerian economy, but currently working to strengthen risk management processes and launch new digital channels targeted at 2 million customers of the bank in the first instance. First Bank has an estimated 10 million customers, which the lender plans to migrate onto new technology platforms, including off-site automated teller machines, as well as agency banking. And finally, one of the listed consumer goods companies, Union Dye Consult, is gearing up to tap into the value chain of the FMCG sector of the economy. At a meeting with the broker-dealer community of the exchange, the management of the company discussed the restructuring and diversification plans, which targets rice and cassava farming.
What did we see as the opportunity? We saw as the opportunity the consumer market in sub-Saharan Africa. Sub-Saharan Africa has a significant consumer market valued at over $500 billion in terms of just consumption. So essentially, people must eat. People need to eat. Whatever the state of the economy, whatever the state of the credit environment, people need to engage in consumption. And we realized that was the most optimal way to actually try and refocus this company in the short to medium term. We concentrated on 2 things: agriculture, processed goods. Agriculture is, primary agriculture, which is short term, we could get cash flow into the company and bring it back to a stable footing. And in the long term, processed goods, move up the value chain and develop the company into more significant cash flow, diversify its income streams, and actually make it a viable long-term company.